Hello, CA Inter students, and welcome in Business and Corporate Law, second paper of CA Inter, and total marks are 100. Now, before we start, what's that in the paper? Like what kinds of chapters and the subjects we are going to face? Let's understand first of all that this subject, how it would be there in exam. If you look at the title, it is written that Business and Corporate Law. So it's quite obvious that this entire chapter or this entire subject is categorized into the two parts. The first part here is obviously the corporate law, and the second part, what you can see over here, it is business law. Now, as far as exam is concerned, out of these two, corporate law would be for 60 marks and business law in exam would be for 40 marks. Now question arises that what we are going to learn in this corporate law and what we are going to learn in this business law. So obviously few chapters. Now what are those? When I speak about the corporate law, we are going to learn only and only one particular act over there. And I know that before I say you have guesses, and that is nothing but the Companies Act 2013. Companies Act 2013. I want to remind you that before you just came to this CA Inter, already you have studied few chapters of the Companies Act 2013 during your CA foundation. I want to remind you again that what we learned over there, we try to learn the basics of companies. If you remember the few concepts like separate legal existence and lifting of corporate veil, and few doctrines like the doctrine of ultra vires acts, doctrine of indoor management, doctrine of constructive notices like concepts. We also try to learn that what are the kinds of companies. If you remember, we try to learn there that what is Section 8 company, definition of private company, definition of public company, and lot of other things. We also try to learn that how the company gets incorporated, what's the process there, and what is the concept of promoters. Then we try to learn the few important documents which are, I would say, the prerequisite documents, like without that you cannot incorporate company. The first one is Memorandum of Association and the second one was Articles of Association. So those 5 chapters we learned already in CA Foundation. Now in CA Inter, all these 5 chapters of CA Foundation are put under one chapter called the preliminary. So if you have the ICAI study material, just try to look at there. That first chapter is talking about preliminary. And if you just try to study there, you will find that the concepts are same what we studied in CA Foundation. So our Companies Act 2013 journey in CA Inter is starting onwards that. That means beyond preliminary. Now obviously the question comes like, what are the chapters we are going to face? But wait, my dear students, we are going to learn that but later on. In business law, we are going to learn these many topics there, these many chapters. The first one is obviously the extension of very diversified, very interesting act, the Indian Contract Act. But we understood that in CA Foundation, we are not going to learn the entire Contract Act 1872. It is just up to section 75. The remaining part we are going to face in CA Inter. And now guys, this is the time where we are going to face the extension of the Contract Act 1872. So obviously we are going to learn the extended version of the Indian Contract Act 1872, and here it's known as the special contracts. Here it's known as what? Special contracts. And the special contracts, obviously it's nothing but the Indian Contract Act 1872. And I would say it is the remaining portion, the extension of what we learned over there. In business law, one more topic it is added over here, and that one is the General Clauses Act 1897. After then, one more act we do have in our syllabus, and that one is the Negotiable Instruments Act 1881. I want to remind you that while learning the accounting subject of CA Foundation, your teacher must have explained that few concepts of negotiable instruments were there, like bill of exchange, promissory note, and certain other concepts you must have heard over there. I hope so. Now, all these three concepts, whether I talk about the promissory note, whether I talk about the bill of exchange, or whether I talk about the check, all these three concepts are discussed in detail in the Negotiable Instruments Act 1881. And all this we are going to learn in our CA intern. Our fourth topic is also there. I will not take that as the act, but it's a plain theory. Plain theory. And this theory will surely help us to understand that while we are reading the law, precisely few phrases, few sentences, then how to understand the law, how to interpret the law. And the chapter's name over here is the Interpretation of Statutes. So this is what we are going to learn in this entire CA Inter. 60 marks for the company law, obviously corporate law, and business law is for 40 marks. Total comes to what? 100 marks. Now question comes that, okay fine, what about the exam pattern? Exam pattern. What we are going to learn in exam? So let me tell you Bacha, that as far as exam is concerned, exam has technically the two parts to face with. The first one here is the descriptive questions, and other part is the MCQs. MCQs and descriptive questions. As far as MCQs are concerned, that you are going to face for the first time, or I would say while writing the paper. First of all, you have to complete the 30 marks MCQs, and then you have to attempt the descriptive questions. MCQs are there for total 30 marks, and descriptive questions is of course for 70 marks. Now question arises about these MCQs, that is there any negative marking or not? Before CA Foundation, all of you know that there was CPT, and even during CA Foundation, two subjects were MCQ based, and there was negative marking. One wrong answer and your point 25 gone. So the question arises that even in CA Inter, where 30% of the total paper goes for the MCQs, is there any negative marking or not? Answer to this question is no, there is no negative marking. No negative marking. So there's also a lesson for all the students that while you're facing the CA Inter exam, precisely the MCQs, don't leave any question unattended. Try it. Maybe if it's true, then you will be awarded with 1 mark. For your card information, sometimes ICAI is asking those MCQ for the 2 marks as well. So under that fear that, okay, what if I might have gone for wrong answer, I may lose the point 25. That fear you don't need to maintain. The reason is there is no any negative marking. So students, this is all about the entire subject description in the business and corporate law. Business law is for the 40 marks, and obviously corporate law is for 60 marks. And in the corporate law, Companies Act, business law, these 4 points we are going to learn for total 40 marks. Exam pattern goes for 70% is the descriptive questions, and 30 marks are for the MCQs. Alright. So in today's class, the first we are going to study or start is the Companies Act 2013. Here, Companies Act 2013. And I know your doubt. Your doubt is like, okay, fine, if we have this Companies Act 2013. Oh, sorry. Yeah. Then in this Companies Act 2013, what chapters we are going to learn? What chapters we are going to learn? So let me tell you, Bacha, that in CA Inter, you have those first 5 chapters of CA Foundation. As I already mentioned, that those first 5 chapters of CA Foundation are there in the name of preliminary. Where again the concepts like the types of companies or separate legal entity or characteristics of the company, all those concepts are going to be added, and we have to learn that. Okay. So in our class, these things are already done with. So it's just a recap like points. Our real CA intern would start with this chapter, and that is prospectus. Prospectus. After prospectus, we have another chapter, and that one is general meeting. General meeting in your ICAI study material is referred as management and administration of company, where we are going to learn few basic points. After general meeting, we have another concept called the share capital. Now, I want to warn all the students who are going to learn the share capital. In CA Inter, I have categorized share capital concept into 3 parts. 1, 2, and 3. And all these are from share capital. Okay. Now, why there are 3 parts? Because 3 different concepts are attached with this topic. The first one is basics of share capital. Okay, in the basics of share capital, we are going to study certain processes, that how to issue the share, how to issue the bonus share, how to issue right issue. If any company wants to go for issue of the preference shares, then what's the procedure? If any company wants to issue the sweat equity share, then what's the procedure? If any company wants to go for the share issue at discount or share issue at the premium, then what's the procedure? If company wants to go for the ESOP, what's the procedure? Buyback and lot of other stuff. So basic of share capital is the basically procedural aspect, where we are going to learn that what a few processes are conducted and executed by the company. Second point we are going to learn, it is the transfer and transmission of securities of the company. So technically we can understand that, okay, if any shareholder of the company wants to transfer his shares to somebody else, then how it should be done. I know many of you asking, sir, it's quite obvious and quite easy. Simple है. क्या करना चाहिए? अरे कुछ नहीं. Directly go to your Demat account and just have few clicks. Because in your Demat account, the trading means like the sale and buy happens through few clicks. Let me tell you, Bacha, in India, majority of the companies, like more than 70 to 80%, I would say, they are not registered with the stock exchange. And if they are not registered with the stock exchange, obviously they may not have the electronic securities, electronic quantities. What they have is just the physical form of shares. And here the question comes that if such people wants to transfer the share, how would they go? I know some of you may have this doubt. Arey, it's quite simple, Ray. Take the money and give your share certificates. Deal is done. Deal is done. Student, you understand, if this is what you're thinking, that you just accept the money and hand over your share certificates to somebody else. Look, what a kind of practical problem arises. in the record of company, still whose name is appearing? Transferor's name. So transferee will not be able to get all the benefits like bonus, like rights issue or the dividend. Still that would be continuing in the name of the transferor only. Then if transferor wants to enjoy all these benefits, then what was the point of transfer? So here we have to understand that how the manual shares are going to be transferred legally, validly from one hand to another one by following the lawful compliances. Okay, now third is the share allotment, or rather I would say not a share allotment exactly, but I would say the security allotment. Securities allotment chapter. Securities allotment means that when the company goes for the a public IPO or FPO. Right now I am recording this session in the era where Adani Enterprises Limited has withdrawn its 20,000 crore rupees FPO back. But the point is, when that FPO was actually issued to the people, then obviously people must have paid the money for that. So it becomes the company's duty to allot the shares. So here we are going to learn that when the allotment of the securities becomes valid, what kind of rules, regulations and the provisions need to be complied by, and under what circumstances that allotment would be treated as void or irregular. That kind of concepts we are going to learn here. Look, now one word or one point I want to draw your attention with is, I have used the word securities and not the shares here. Precisely these 2 points if you see. So securities doesn't mean only shares. We also include the debentures. So while we learn these two chapters, now we have to be very careful. Why? All the provisions what we are studying over here, that just do not apply to shares. Not only equity shares or the preference shares, but at the same time, it also applies to debentures as well. So mind well that. Okay. After share capital gets over, we are moving towards the another few chapters. For example, dividend. Once the dividend chapter gets over, we are moving towards the another chapter, and that one is accounts of company. And after accounts of company, we are going to move towards the another chapter called auditor of company. So as you can check it, students, the list is too huge. हाँ और क्यों नहीं होना चाहिए भाई? It is 60 marks question. This entire portion would be there in your exam for 60 marks. Okay, is the company law over for the CA Inter? नहीं रे. Still we have one more point called the, I would say, miscellaneous. Some more chapters we have, small scale chapters, mixed chapters. In the miscellaneous chapters we have some small scale chapters, but still very important while learning the CA Inter. Okay, what those are? The first what we are going to, I'm sorry, just a second. Yeah, here. So first miscellaneous chapter what we have, it is membership of the company. Membership. After then we are going to face one more important chapter called charge. After charge we have your favorite debentures. After debentures we have deposits. And once we clear with all these topics, I can announce that your entire Companies Act 2013, as far as the CA Inter is concerned, is coming to the end. So I would say that section 23 onwards, but up to section 148, we have syllabus in CA Inter. Then what about the section 149? I want to tell you that section 149 onwards, the topics we are going to learn in CA final, not here, in CA final. So this is all about the Companies Act 2013 here. Okay. Now pause the video and just try to note it down. Okay. ठीक है. Now once it is noted down, we are moving towards The first chapter of our discussion out of this entire concept is prospectus. Prospectus. So as usual, let's just learn the flowchart that in this prospectus chapter हमें क्या क्या सीखना है, ठीक है? And what this prospectus is containing. Okay. So basically speaking, guys, the prospectus is starting from section 23 to section 41. All right. In this entire point, हम कौन से points पढ़ने वाले हैं? Let's have a look into that. The first one what we are going to learn is right down over here. Okay, let me change the color of these. Yeah. The first one we have the definition and meaning of prospectus. It is very well defined under section 2, subsection 17. Yeah. After then, After then we are moving towards the types of prospectus as discussed here. In the types of prospectus, we are going to learn these many concepts. Now, what are those concepts? The first one, what we have, it is right down shelf prospectus, very well defined under section 31. Okay. Once it's done, we are moving towards one more important concept, and that is called, I would say, red herring prospectus. Okay. I'm sure that red herring prospectus you must have heard somewhere. And red herring prospectus is defined under section 32. Okay. One more point we are going to understand, and that one is abridged prospectus. Alright. Now I would like to draw your attention is that just a few attempts back, ICAI has notified that abridged prospectus will not be applicable as far as the examination is concerned, which is actually provided under section 33. But it's a very small concept and we should not take a chance. Okay, so better that while you are going to attempt the exam, okay, we should be full with all the weapons. So this is a very little concept. So we will discuss in our classroom, and if maybe there's a question, sometimes it may happen, but okay, if there's a question, we have to write accordingly. Okay. After then, one more concept we have to learn here, and that is known as deemed prospectus. All right. And deemed prospectus is defined under section 25. Yeah, put it there. Section 25. After deemed prospectus, we are going to learn a very little concept called information memorandum. Information memorandum. Okay, now once the types of prospectus is completed, we are going to learn one very important topic over here is and that is the legal significance of material misstatement in prospectus. Material misstatement in prospectus. Legal significance of material misstatement in prospectus. Now, okay, what are the points we are going to learn in that? The first one, what we have it is write down meaning of material misstatement. So if somebody is doing this material misstatement in the prospectus, what's the meaning of that? Few questions we are going to learn that. After then, if there is a material misstatement, who are the persons would be considered as liable under that? So write down persons liable under material misstatement. Material material misstatement offense. Next point is if somebody is materially misstating the prospectus, then what is the liability? Liability is nothing but what kind of actions can be taken against the responsible persons. Now, liabilities are further categorized into the three parts here. What are those three parts right down over here? First of all, what we have, it is the section 34. Section 34 talks about, right down here, criminal liability. We have one more section here that's talk about the section 35. Section 35 is not a criminal liability, but it talks about what? Right down over here, civil liability. Yeah. After then we have section 36. 36 talks about liability in case of fraud. Okay. And one more we have, and that is the section 37, which talks about here the class action of the shareholders of the members. Class action. Okay. One more question comes like that: who can claim the relief? Who can claim the relief under? Who can claim the relief under material misstatement in prospectus? That also we are going to face with. So these all are the topics we are going to learn till this. Yeah, few more points are also there. Okay, and that one is right down here, section 38. And section 38 is talks about what if these shares are issued in fictitious name? What if the shares are issued in fictitious name? In fictitious name. So technically speaking, guys, these are the four important topics we are going to face. Let me just draw the arrows so that you can just relate that which topic is going where. Okay, till I complete this, you please complete your notes there. So these are the topics we are going to face with in this chapter called prospectus. Alright students, so now let's begin with the first point of the prospectus, and that talks about the definition of prospectus. As we can see here, the definition of the prospectus is provided under section 2 subsection 70. Now what it speaks about, now before we start the definition discussion, let's understand a few questions first. The question number 1 is, suppose in exam it is asked like so that there are few people who are distributing certain pamphlets. People are distributing certain pamphlets. Now what is mentioned in the pamphlets? It was mentioned that a company has certain shares pending to be subscribed. Interested parties may apply for the same. But that was written in the pamphlets that still the company has few shares pending to be subscribed for, and interested party can apply for that. Now question is asking like whether these pamphlets are considered as prospectus or not. Is it prospectus or not? That's the question. Is it prospectus or not? Let's see the other question. Similar kind of, but a little bit twist in that. Let's say guys, there was one company and company's shares were pending to be subscribed. Certain shares. Alright. Pending to be subscribed for. And company went to local newspaper, suppose take here the Times of India, And in the Times of India, they advertised. In the Times of India, they advertised stating that there are few shares of the company are still pending to be subscribed for, and interested party may apply to that. So here the question is that advertisement in the newspaper is considered as a prospectus or not. Whether that advertisement in the newspaper is a prospectus or not. This is the second question. Yeah, let me put it like this. Next question is, there is a company, suppose the company's name is Surya Energies Limited, and this company wrote somewhere around 180 letters by putting them into some envelopes and dispatched these envelopes to certain persons or certain members, I would say. Now, fact about this case is these envelopes contained one information on the cover letter. It was mentioned on the envelope that it's confidential. It's confidential. And in our exam, this question is that whether are these letters or these envelopes considered as prospectus or not. All right. So try to see all these three questions one by one here and try to understand the question first. Look, my dear students, now we are CA Inter students. So in CA Inter, please remember a few things that before understanding the answer, focus a lot on the question. In CA Inter 70 marks paper, a lot of questions will be the case study based, like the story based. And the biggest problem and the challenge here is like you have to identify the hints in the question. After finding the hints, you have to identify that these hints related to what kind of topics, and once the topics are identified, then you have to make the point clear in your exam by way of writing that. So the point is, understand the question first. Try to figure out the hints given in the question. So now we have the three questions. In the first question, guys, fellows or the people are distributing pamphlets, inviting the people that certain shares are still pending to be subscribed, and please you may apply. Same thing is happening in the question number 2, but the slide different. Not a pamphlets, what? Advertisement in the newspaper. And third is distribution of envelopes having one word on the mark is confidential. And in exam, there is a question that whether all these three documents, pamphlets, advertisement, or dispatched envelopes, are they prospectus or not? So how to answer them now? Okay. Anyone who wants to give you the answer of this question, he must have to be clear with the definition of the prospectus first. Now, what is the prospectus of, what is the definition of prospectus here? So, it is defined under section 2, subsection 17. Alright? And what it is trying to say, look at over here. I am just copying this from the material so that later on we can bifurcate that. Alright. Yes. This is the entire definition, section 2, subsection 17. Now let's see the each and every component first. It is saying that prospectus as per section 2 subsection 70 means any document described or issued as prospectus. That is the point number 1 here. Any document described as prospectus. Now, what do you mean by this? It is trying to say that any document formally accepted by the company as prospectus is prospectus. This point also says that it is the formal prospectus. What do you mean by formal prospectus? officially accepted by the company that yes, this document, this booklet we will consider as prospectus. Okay, practically sometimes, let's say if you want to see that how does it look like, go to internet browser and just type your one company's name. Suppose TCS Limited's, prospectus in PDF. Okay, so now we have here sharesdata.com or even some other, look at even over here the TCS.com, and let me just show you here. Hold on just a second. Not maybe this. Just to check it out. Yeah, look at over here now. No, it's the annual report. It's also the recommendation of the final dividend. No, not like that. This is the prospectus in PDF. It's not coming here. Okay, maybe we have not checked it. Let's try. Yeah, it's loading. Yeah, now look at over here. 434 pages it's there. And it is mentioned here, this is the prospectus. ठीक है, ये देखिए बेटा, ये होता है prospectus. Somewhere around 434 pages are there. A lot of details are provided, lot of details. Look at over here the table of contents, definitions, a brief, contracts, capital structure. You can see green shoe option, how the business is having their history, main objectives, what is all about the Tata Group, who are the promoters, and lot of things are provided. Lot of things are provided. So in this document, wherever Tata Consultancy Services Limited wanted to gather certain capital, if they wanted to raise a certain capital from the public, they issued this document, and formally this document had been taken or considered as the prospectus. So the first line of the definition is trying to say that any document which is prescribed by the company as the prospectus. Alright. Further, it is mentioned that it also includes red herring prospectus and the shelf prospectus. Now, what are these two fundamentals? These actually two are there in my discussion, but not as of now. If you just look at the, this particular flow chart over here, I have mentioned shelf prospectus and red herring. So this is the part of my discussion, but right now I don't want to. Let's do it later on. Now pay attention here. It is written that any notice or any circular or any advertisement or any other document can also be the prospectus as per section 2 subsection 70. So this definition is trying to say that apart from red herring prospectus, apart from shelf prospectus, apart from the formally adopted prospectus, there can be any other document as well which can get the status of prospectus, provided the document must have to comply the conditions as mentioned under section 2 subsection 7d. Now what are those conditions? Let's understand. Look what it's written here, that any notice, any circular, any advertisement or any document can be called up, can be considered as the prospectus if it was made for inviting offers from the public. So the first condition what we are figuring out over here is the public invitation. Public invitation. But of what? Look further, it is written that for the subscription or purchase of any securities. So write down over here that subscription of any securities. Alright. Of a body corporate. Of a body corporate. Now if you read these two particular definition here, these two, let me just highlight it here. These, okay, take second, is closer to home. Aha, now this looks like as a board. Yeah. Okay, let's just remove this. I would say, yeah, this as well. Now it looks like as a presentation board. Yeah. So any invitation to public plus subscription of any securities, when these two conditions are there, then any document can be considered as the prospectus. So today if I am issuing any small notice, but if this notice I have issued to request the people I'm telling you, public, requested the people that some, my company, some shares are still pending to be allocated. You please apply to my company and my company may think to grant you the shares. Then this notice would be considered as prospectus. The reason is I have invited public, and second thing is I have also requested them to subscribe my shares, and share is one type of security. All right, fine. Now, before I go ahead of the discussion, let's understand these two words first of all. In the second point, it is written that any securities. Now, first question comes like, okay, what do you mean by, okay, security term? What do you mean by the term called security? So here, the term security doesn't mean only shares. It includes shares as well as debentures. Sometimes the debentures are also identified as bonds. So yes, it is also considered as bonds. And please remember that whenever I speak about the shares, it just not include the equity shares, but it also includes preference shares as well. So please write down over here. Shares over here means equity shares as well as what? Preference shares. Equity shares as well as preference shares. So whenever I speak about the security, I'm speaking about equity shares as well as preference shares, as well as debentures. Okay. Now, biggest question comes here. What do you mean by public invitation? Public invitation. Meaning of now public invitation. Now I know what you people are thinking. Whenever I speak about public invitation or the public offer, you go back to your CA foundation and you are trying to just memorize that what you learned in CA foundation during the learning of the Indian Contract Act, because in the offer chapter we had a certain points like what is a specific offer and what is a general offer. But let me tell you that in Companies Act 2013, the meaning of public invitation is a bit different. Law has slightly differently decided or defined, rather I would say. Let's take the example in this way, that what do you mean by public invitation? Suppose Mr. CA has offered to, let's say, Mr. Sunil, stating that my company has quite few shares and I offer you to buy this, to apply for, to subscribe this. Just to offer, just a proposal is raised to Mr. Sunil. So Mr. Sunil is invited in Mr. CA's company that he may subscribe the shares. And now if I ask you the question that what is the nature of this offer, I want to give the two options here. Is it public invitation or it is private invitation? And I know most of your answer is like, maybe you are thinking, so it's quite easy. This offer is made to only one person, and therefore it cannot be public. It is private. This, generally in my career I have seen, this is what is the answer of most of the students, that this is private offer. Let me tell you Vacha here, one of the Supreme Court's judgment what was conducted in the case of Sahara Real Estate Corporation Limited versus SEBI. In this case, Honorable Supreme Court held that while we are determining the status of public invitation, what factors we need to consider. Whether any invitation is public invitation or private invitation, that doesn't depend upon who is inviting. It doesn't depend upon who is invited, but that depends upon who can accept it. For example, you see, Mr. CA is inviting Sunil. So it doesn't depend on who is inviting. It doesn't depend that who is invited, but it depends upon that who can accept it. Now look, according to this judgment, this example may have the two different outputs. How come? For example, what if Mr. CA says like this, Mr. Sunil, I'm inviting you only. This offer is only for you. This invitation is only for you. That means other than Mr. Sunil, no one else can accept this proposal, this invitation. Look at this word. So wherever guys we restrict the acceptors, that only you can accept it, only few of you can accept it, only let's say guys, university students can accept it, only the residents to the city can accept it, only the residents to the state can accept it, only the citizens of India can accept it. That means here you are literally restricting the acceptors. It means that everyone cannot accept it. Only the few people who are restricted with that conditions can accept it. So whenever we are restricting the acceptance, then these kinds of invitations or the offers are considered as private offers. Only you, only students, only residents to certain area, only the people of certain caste or certain community. So wherever we are just restricting the acceptance, then here it's private invitation, private offer. Then when we can say it is a public invitation or the public offer. Look, any offer, no matter to whom it is made, no matter who is invited, but if it can be accepted by anyone or everyone has equal chance to apply for that, then these kinds of offer is considered as public offer, and these kinds of invitations are considered as public invitation. Now just to focus to this point, Mr. Chirag Akhani here has invited Mr. Sunil. But now here we have to check, is it only Mr. Sunil or simple Sunil? Suppose even if Mr. Chirag Akhani applied to Sunil, but one of the friends of Mr. Sunil, let's say Mr. Bhavesh, when he found that Mr. Sunil is least interested to buy the shares, but Mr. Bhavesh wants to. So look at over here, Mr. Bhavesh received the information from Mr. Sunil. Earlier, the communication was passed from CA to Sunil. Sunil didn't show much interest. Mr. Bhavesh came to know about this information from Sunil and he applied to the company. And what if company didn't show any hesitation then? This company, CA's company, accepted the application made by Mr. Bhavesh then. It means that while this invitation was made, there was no any restriction to Mr. Sunil only. It was open for anyone. Mr. Sunil was just one of the reference here. Understand? So let me tell you that whenever in corporate law we are discussing about, that whether any invitation is a public or private, don't judge that on the basis of the number of people invited. But rather you judge this on the basis that other than those invitees, other people can also apply for that or not. If answer comes yes, it is public invitation. But if answer comes no, it is not public invitation, it is private invitation. I hope it's clear. Okay, still I have few things to talk about public invitation. Let's go that. In Sahara Real Estate Corporation Limited versus SEBI, Supreme Court observed a very interesting remarks there. They have observed that obviously whether it is a public invitation or a private invitation, that depends upon the fact that who can accept it. If everyone is allowed to accept, no matter how many people are invited, then that would be considered as public offer. And if it is a public invitation or public offer, now let me tell you which. If there is public invitation to get these securities subscribed, then guys, issue of prospectus becomes compulsory. You people cannot accept any security amount until and unless proper prospectus is issued to the public. And just now I have shown that prospectus sometimes goes for the hundreds and hundreds of pages. Because government wants the company to disclose all about all the facts. What was the past of the company, what is the present of the company, and what will be the future of the company. Government wants that company must have to disclose all the facts or everything to the public so that they can take the sound decisions about their investment. But if we consider this definition of the public invitation, look, but again I want to repeat, if there is public invitation, that means issue of prospectus becomes mandatory, compulsory. So anyone can accept, that is the public invitation. But if you are just issuing this with certain restrictions, only people belong to this community, only people who complete or fulfill these conditions, then these kinds of invitations are not considered as public, but they are considered as private. That's what Supreme Court's judgment wants to talk here. But actually that created a problem. What kind of problem there was? Suppose today I just make the proposal like this, that only Indians can accept my application, my offer, nobody else. My invitation should be accepted by only and only Indians. No one else can accept it. Now look at my dear students, if I just put these words, everyone cannot accept who are there on this globe, but only Indians can accept it. So through the language of the law, what I'm trying to do, I'm not inviting everyone who are just actually residing on this planet. I'm just inviting only Indians. So by the way, I am restricting the meaning of acceptors. If I ask you this question, it is public invitation or private. So language wise, just now we have learned it should be considered as what? Private invitation. You're taking this to suppose only the students of Christ University can accept the invitation. In the Christ University, there are 22,000 students. What kind of invitation it is? Obviously, your answer would be it is private invitation, not public invitation. If I say that only the people of Bangalore district, no one else, again private invitation. Only the people of Karnataka state, no one else, private invitation, because we are not letting the people other than this to accept my invitation. So Supreme Court also remarked that if we allow like this, ultimately what we are doing, we are letting the companies to invite 140 crores people of this country in the name of only Indians without making them to issue prospectus, because it is private offer. Private offer means no need to issue any prospectus. And first time in history, Supreme Court of this country decided that it is the time that private invitations now must be measured through certain numbers, through certain counts of the people. And therefore, guys, they have suggested the government to make certain policies. And look now, guys, what policies made by the government. Government says that even if it is a private placement, even if it is what? Private placement. But beyond certain number in a year, in a financial year precisely, more than certain number in a financial year, then even if it was private placement, it was invited through the private mechanism, in the eyes of Companies Act 2013, it will be considered as public offer. I hope you are understanding this. So sometimes even if we are going by private invitation, saying that only few people can accept it, only people of certain community can accept it. But the moment when this invitation is exceeding a certain number as provided in the law, this private invitation will be considered as public invitation. That means indirectly law is trying to say that you have to issue the prospectus. Without that, it's not allowed to approach those people. Alright. So now I think you want to know that what's that number here given by the law. So it has said that private placement to more than 200 members in a financial year will be treated as good as the public invitation. And if it is a public invitation, my dear students, even if it is done through the private invitation, you must have to go for the prospectus. I hope you understood, guys, that what do you mean by private invitation and what do you mean by public invitation. And one also interesting fact that sometimes we are actually making the invitation private, but if that invitation is increased to certain number of members, if that offer we made to more than certain number of members in one financial year, then that concept would be considered as public invitation, and all the rules of public invitation would be as it is applied there. I hope I'm clear to that. Okay. Now, this 200 count has two exceptions. Sometimes in exam, let's say question goes like this, that suppose company has invited 500 members, you see 500 people. It was also written that only these 500 persons, okay, let me put it this way, only these 500 persons can accept the proposal. Can accept the invitation. So what kind of invitation it is? This is also a question. Let's take it that way. Okay. Only certain 500 persons can accept the invitation, no one else. So technically speaking, guys, the answer comes to what? Public invitation. Why? Even if it looks like as a private invitation, but private invitation to more than 200, just now I have explained, is considered as what? Public invitation. So here it is looking that as in a year we have gone for 500 persons, which is obviously more than 200 persons in a year, and therefore it is public invitation, not a private invitation. Okay. Now, but what if your fact says like this in the question, that out of this 500, 350 are employees to whom the shares are invited under the scheme of ESOP. ESOP means what? Employee stock option. Now, whether it's a public invitation or a private invitation, in short, I'm asking you that whether company needs to issue the prospectus or not. So if you look at here, this rule, private invitation to more than 200 members would be treated as public invitation. This concept, this statement has an exception. There are actually two exceptions. So if you are inviting these two kinds of persons, then these invitations will not be considered while counting those 200 number limit. And what are those two people? Let me tell you guys. So wherever guys the shares are issued, okay, wherever shares are issued to employees under the scheme of ESOP, then such invited peoples will be excluded while counting this 200 limit. Got it? So employees under the scheme of ESOP. Second is QIB. QIB stands for Qualified Institutional Buyers. Okay, now all those students who are actually keen to know about the share market or the stock market, I think they might have heard about this word called the qualified institutional buyer. Precisely, the SEBI gives such identity to certain people who are actually very what I can say who are trading in the stock market as being institute in lots, not just like a customer like you and me placing just the order for a few quite of shares, but these are those people as being organizations. They are trading in the stock market. For example, LIC. LIC is not going to buy just a few quite 1,000, 2,000 rupees shares. Whenever LIC like institution comes to play in the stock market, it buys thousands and thousands of crores of rupees shares in the market. And SEBI recognizes that which are the organizations or the parties can be considered as QIB or not. So wherever guys you are inviting those people who are designated as QIB by SEBI, then such people will also be excluded while counting 200. So that was the concept of public invitation. While we understand the concept of the Companies Act 2013, precisely the prospectus. Any invitation what you're arranging privately without addressing the public or without exceeding the number of 200, then such public invitations in the eyes of Companies Act 2013 are considered as private placement. Please don't forget this concept. It's called private placement. So sometimes in exam they can ask you that what do you mean by private placement. Never ever try to misunderstand this, that private placement means private invitation. No. Look, private invitations has the two categories: offered to 200 or more persons in a year, or offered to less than 200 persons in a year. If it is less than 200 persons in a year through private invitation, that concept is called private placement. But if it is offered to 200 or more, just now I have explained, it will be considered as public invitation. And if it's a public invitation, then you know very well we must have to go for prospectus. Entire chapter, all the provisions, section 22 to section 41, everything will as it is apply. So now guys, once you are clear about this entire explanation, we are ready to touch the definitional part over here, these three questions. So first of all, it is written that people who are distributing pamphlets to the persons, to the people, and where they are saying that some shares are still pending to be subscribed. So let me tell you, while you are issuing the pamphlets, that means that your invitation is not limited to few people, only few. No, it's not like that. It means that it is available for everyone, or rather I would say anyone, whosoever applying there may get it. So obviously public invitation concept is there. And second cross question what I would like to make it over here, that I'm sorry, not a publication, it's a public invitation. And my second question over here is whether was it for subscription of any security. Obviously it is clearly written that certain shares are still pending, so it is also for the shares. So yes, it is for the shares subscription. So my dear students, if you refer this definition of section 2 subsection 70, it is written that any document which contains the invitation offers from the public for subscription of the securities, then such documents would be considered as prospectus. So according to section 2 subsection 70, pamphlets definitely are considered as prospectus. So answer to this question is here. Answer to this question here is, of course, yes, it is prospectus. Second guys, again now the similar kind of question. Here the company had advertised in the newspaper stating that, advertising that some shares are pending. Again guys, there was no limits, that only few qualitative people can apply for that. It was open for anyone or everyone, and it is advertisement as well for the subscription to the shares of the company. And therefore guys, again just like the above example, both these features are available here, and therefore This is also what, my students? Prospectus. Third question is Surya Energies Limited. 180 letters are issued to members requesting them that some shares are pending. But here the question comes, is it a public invitation or a private invitation? It depends upon like who can accept it. If there is no any limit on the acceptance, anyone could accept it, public invitation. Or only the invitees can accept it, private invitation. From the given facts of the question, how would you come to know that it is only members or anyone apart from members? Look at guys, in this question, what hint is given, and what's the hint? This confidential. General English grammatical meaning of the word confidential means what? It means the information what we have passed, the letters what we have issued, are not allowed to be opened by anyone other than the invitee. So what it says? It says that company doesn't want anyone else to get the benefit of these 180 letters. It is trying to say that only the members who are invited should open these envelopes, should read the proposal and should apply. It is not open for any other one. So just when this one word confidential is changing over here the entire game of invitation. If this word wasn't there, then answer could be different. But just because of this confidential, guys, the answer would be here, no. It is not a prospectus. I hope I'm clear. It is not a prospectus. Even if it was for the subscription for the security of the company, but it was not public invitation. And therefore, guys, these envelopes are not prospectus, and therefore you no need to follow the provisions of prospectus. I hope you have understood, guys, one part of the definition. All right. Now, before I just start a discussion of these concepts like, the shelf prospectus or red herring prospectus, let me ask you one question. Let me test your knowledge. Suppose, okay, all of you know, students, that Apple Inc., Apple, okay, which is manufacturing now the MacBook and iPhone-like gadgets. If this company today comes in India and wants to gather the investment from Indian public, for your kind information, foreign companies can come to India. They can even launch one public offer as well. So if any foreign company comes to India and asking for investment from the public of India, then chapter of prospectus applies or not apply? That's the question. All right. I hope you now understood my question. My question is, if any foreign company comes to India, suppose example what I have given over here is what? Apple Inc. that comes to India and launches the investment scheme. That means it wants to collect some investment, some security subscription from Indian people. Question here is it compulsory for this company to follow the prospectus chapter? Does it need to follow prospectus chapter? That's the question. Now, some of you may be thinking that, sir, the answer is quite simple. No, it doesn't apply. Why? Why doesn't apply? Some of you may be thinking like this, that, sir, this is the prospectus chapter's definition, section 2, subsection 70 of the Companies Act 2013. It means that whatever is written in the definition, that applies only to the company and not to anyone else. And Apple Inc. in your example is not Indian company. It is a foreign company. It is registered and incorporated outside India. And therefore, the Companies Act 2013 doesn't apply to it. And if it doesn't apply to it, simple. If it wants to gather or collect investment amount from Indian public, prospectus chapter doesn't apply. Apply नहीं होगा, क्योंकि वो तो सिर्फ कंपनियों को होता है. Now, guys, if you read section 2, subsection 70 very, very carefully, look at over here. If you read it very carefully, what it is written, that Document inviting offers from the public for the subscription or purchase of any securities of a body corporate. Look at guys, body corporate लिखा है यहाँ पे, company word नहीं है, not only company but body corporate. And we understood in CA Foundation well that a company is a body corporate. But it is not only body corporate, there can be so many other entities or institutions which are body corporates. Which are body corporates. Which are body corporates. Even foreign companies are also body corporates. So what I'm trying to say guys, any body corporates when try to get the public subscription of its organization security, whether it is I would say LIC, State Bank of India, all these are not companies for your kind information. But whenever they want to take or gather money from the people now, prospectus applies. And therefore, guys, if foreign company also wants to take it, it is not a company. It is body corporate. So this provision, this entire chapter of the prospectus applies on every body corporate, whether you are a company or not. And therefore, answer to this question here is, of course, prospectus chapter, all the provisions would apply to foreign company which wants to take investment or the share subscription or the debenture subscription from Indian public. It applies. Now let's touch the untouched points of our definition, and two concepts you people are I think confused more here. The first one is, what do you mean by red herring prospectus and what is shelf prospectus here? So just now I have already provided in my flow chart. Red herring prospectus, it is provided under section 32 and shelf prospectus is provided here under section 31. Alright, let's understand now about these two prospectus. Alright, so now let's move ahead with the definition part. In last session we tried to learn that any document what do we issue in order to get the company shares or securities subscribed, and if that invitation is the public invitation, then that document is considered as prospectus. In that definition, it was also mentioned that the term prospectus also includes shelf prospectus under section 31. Now, what is a shelf prospectus? Okay, in order to understand that, let's take an example. Suppose there is a company, public company precisely. This company in the month of January 2022 goes for public issue, and the first time it took 500 crore rupees money from the person or the people. After just the 2 months of this January 2022 issue, company again goes to public in the month of April 2022, and this time it demands more 600 crore rupees. After April 2022, again it goes, and now it is going in the month of July 2022, and it is demanding more 300 crore rupees public issue. Actually, company is so popular and well known that everybody is ready to invest in this company. And at the end, let's take in February 2023, again it goes, and now it goes for somewhere around 150 crore rupees. Now, what's the problem in these four issues? Let's understand. Look, when the company goes to public invitation for the first time, it had issued the first prospectus, let name it as P1. When it went for the second time, it issued prospectus number 2. When it goes for the third time, it issued the prospectus 3. And when it goes for February 2023. It issued the prospectus number 4. Now, whenever we study about the prospectus, law precisely provides that a prospectus needs to be registered first with Registrar of Companies as well as SEBI. Until and unless you register this with ROC and SEBI, you cannot go ahead with public issue. Apart from that, it also provides that you have to take care about section 26, which precisely talks about the contents of the prospectus. Every time when you go for public invitation, this process you have to iterate. Prepare the prospectus under section 26, considering all the contents provided there. Then go to ROC and SEBI and get it registered there. Now, just look at these 4 issues here. These 4 issues, public issues precisely. Prospectus 1, Prospectus 2, Prospectus 3, and Prospectus 4. Technically speaking, the gap between these two, January to 2022, almost around 3 months, not more than that. My question is, in between this Prospectus 1 and Prospectus 2, how much changes we are expecting? How much changes we are expecting? Can I say technically that Prospectus 1 and Prospectus 2, more than 98% details would be same, because just within 3 months, how much changes we are expecting? Maybe some financial parameters changed, some directors are newly appointed, certain officers are actually resigned, vacated. What else we are expecting here? So don't you think it doesn't make sense that already we have provided Prospectus 1, already most of the information about the company, whether I speak about the past, present or future, everything is already submitted to the company. While going for the another issue, why should I give the same details again, and why should I go for the submissions again? Why I should redo the entire process? Instead of that, can I request the law that don't make me to prepare the entire prospectus once again, but rather allow me to just give you the difference between the previous issue and now this issue. Changes. I will just submit the changes and not the entire prospectus. This kinds of demand was raised by the industrialist to the government, requesting that why you are making us to redo the entire process. It is waste of money, waste of lot of resources, and waste of time as well. In the Companies Act of 1956, this request was seriously considered by the government, and they allowed that okay, now one single prospectus we will allow for multiple securities issues. Now, what do you mean by this? That if you want to go for the securities, obviously for some period, within some period, if a company wants to go to issue multiple times security issues within one limited period, the law says now you no need to go for fresh prospectus again and again. The prospectus what you had issued earlier, first time, the same prospectus you can carry on for the remaining securities. So guys, whenever we find these kinds of concepts in the corporate law where one prospectus will be used for the multiple time issues of the securities, then such a prospectus is known as a shelf prospectus under section 31. So how will you remember this? So technically speaking guys, the self prospectus means one prospectus for multiple issues. This is how you can remember the point. This is how you can remember the point. Just, yeah. Now there are a few questions. The question number one comes like, okay, so what is the validity of the shelf prospectus? For example, one company had issued the prospectus in the month of January 22, and the second issue it wants to bring after 5 years. So can we use the same prospectus which was issued in January 22? What is the validity of this prospectus once it was issued? So law has provided that shelf prospectus would be valid. It shall be valid only for 12 months from issue. 12 months. So after completing the 12 months, let's say here it is January 2022. So these would be valid max to max till December 2022. After then, okay, I'm sorry, not December 20, sorry. Yeah. Yeah. After then, means the 12 months after then, if company again wants to go for the public issue, it will have to follow the entire process again. Okay. So once we have issued the shelf prospectus, it is valid only for 12 months. After 12 months, again the reprocess. Fresh preparation, again you go to ROC, comply section 26, go to SEBI, get the confirmation, get it registered over there, and then you can go. Alright. Now, what we have learned so far, that shelf prospectus allows the companies to issue the prospectus only once if it plans to go for the multiple issues. So it's always better and advisable to go for shelf prospectus. Now a few technical points I want to clarify regarding this. First one, the question goes like this. Suppose shelf prospectus is prepared by one company. Let's say company's name over here is Aditya Cements Limited, for example. It issued the shelf prospectus, and we all know now validity of 12 months. In this shelf prospectus, by mistake it was mentioned that this prospectus can be used for the securities like equity, shares and debentures. How this works very clearly. Equity, shares and debentures. And now just after 2 months from this issue, company plans to go for issuing the preference shares. Preference shares. Whether company needs to issue the prospectus again or not. Explained by referring to the provisions of the Companies Act 2013 whether company needs to issue the prospectus or not. What will be your answer? ठीक है, अब देखिए इस पूरी बात को. Shelf prospectus is issued. We all know it's valid for the 12 months. So most of the students may understand like this. Why we should go for the fresh prospectus? It's valid for the 12 months and it is now only 2 months. Company can definitely go for issue of the preference shares and no need to issue the fresh prospectus. अगर आप ऐसा सोच रहे हैं तो बात सुनिए. In the shelf prospectus, which kinds of securities are covered up? So it is equity shares and debentures. Look at preference shares is not added here. So one principle here is that company cannot take the relief under the shelf prospectus if security is not defined in itself. So the condition here is if you want to issue a security, the security must have been mentioned in the shelf prospectus. If by mistake, intentionally or unintentionally, if company forgot to mention any security name, then shelf prospectus cannot be used for that missed security. So answer to this question is company cannot take the help of shelf prospectus as far as this preference shares are concerned. Now, one more question arises sometimes in the minds of the students. It is at the doubt. What doubt sometimes arises? Some students believe that okay, fine, it is shelf prospectus. Once it is issued, we can use this for the multiple security issues. But the point is, what about those changes taken place between the two issues? What if there is fire taken place? Now, this is very, very significant information public must know about us. So if company is not issuing the prospectus, how will you communicate these changes to the public? That's the question now. How will you communicate these changes to the public? Alright. So now let me tell you about this. Look, of course, public must know about all information. Or rather, I would say public must be informed. I think let me just correct my sentence over here. Public must be informed about all information. Rather, I would say all material information about the company. About the company. That means even if company no need to issue the prospectus again, but it must have to communicate those changes. Okay, so company shall communicate the changes. Must have to. Any significant changes taken place in the company, like director changes, any financial parameters changes, um, any huge losses if takes place, or any huge revenues earned by the company, everything will be communicated by the company to the public. But the question comes like how it will be communicated. How it will be communicated. So for that, guys, law has prescribed one document. It's called the information memorandum, which will carry, okay, which will carry or which will contain what? Which will contain all the significant changes took place between two issues. So sometimes for 2 or 3 marks, they may ask you the question that define the document which contains the changes between the previous issue and this issue, and then your answer is supposed to be it is information memorandum. Information memorandum. So technically speaking, guys, you see what is the definition of the final prospectus? Final means which contains all the information. So final prospectus is equal to, first of all, shelf prospectus, what you issued at the beginning, plus information memorandum. Then it will become the complete informative prospectus. So anyone who wants to know perfect about, anyone who wants to know about that, what is what all information about the company, one should not just go to the shelf prospectus, he should also go for information memorandum as well, and then he will be able to find the all the information about the company. So this is all about the shelf prospectus. Let me quickly just tell you that what are the provisions regarding this. So shelf prospectus uh, may be allowed to be enjoyed by certain companies. Uh, it is a prospectus what company needs to issue once for multiple security issues. Uh, its validity is only for the 12 months, and any changes took place since the previous issue, that will be communicated to public as well as to the ROC as well as to the SEBI by putting all the details on a document named information memorandum. Okay, so after self prospectus, now we are going to learn one new concept, and that one is section 32, which is known as red herring prospectus, and it is defined under section 32. Now, what do you mean by red herring prospectus? So, whenever company goes for IPO or even FPO, according to SEBI guidelines, 90% subscription, achieving minimum at least 90% subscription is mandatory, compulsory. And what if we could not achieve this 90% of subscription? Then what are the consequences? So we have to refund the entire amount back to the public from whom we received it. So companies are trying very much hard to achieve this 90% of subscription. And how will they achieve this? So some of you may be thinking that company should go for underwriting. But underwriting option is always very expensive. You may have to incur somewhere around 5% of the total issue as the underwriting commission. So sometimes company may not opt for this option. Is there any option where company doesn't pay 5% of underwriting commission, but still there are high chances of getting this subscription subscribed 100%, not only 90%, but 100%? Is there any chance? Answer is yes. Look, according to many surveys, why companies failing to get this 90%? The reason is price. Just imagine the company could achieve only 82%. That means there's a very good demand, very huge demand in the market. But because of certain price issues, people are showing disinterest to the company's stock price or the share price. It is exactly like this. Sometimes we go to buy shoes. We like some shoes, but when we see the price, it is showing somewhere around 10,000 rupees. So what we think, oh, 10,000 is too huge, too much. Instead of 10,000, if it was somewhere around 5,000, then I could think, but 10,000, no, yaar, I don't want to expand that. हम ऐसा सोचते हैं कभी कभार. The 10,000 is too much. Instead of that, if it was 5,000, I could have tried. Same thing happens in the company's share price as well. In company's share price, if company has kept, let's say, 350 rupees, 82% are ready to buy at this price, but some people may think 350 or no. As per the fundamentals, 350 is bit high. If it was somewhere around 250, I could think, or 300, I could think. This kinds of mentality is working in the primary market. So now companies are very smart. They thought that is there any possibility, is there any chance where we can get to know about the public's mindset that exactly at what price they will subscribe me at 100%. If that price we come to know before issuing the prospectus, then there are very, very, very less chances to get the subscription failed because of this minimum subscription. And because of that, now what companies are doing? Look, what companies are doing. Sometimes if I ask you that how would you come to know or get to know that exactly at what price company is going to get exactly 100%? Because we cannot go door to door asking them, excuse me, at what price you want to buy my shares. In India, there are 140 crore people. We cannot ask individually. When this matter was raised before the SEBI, after a lot of brainstorming, they came up with this idea. This idea is just like a survey, but survey in the unique way. This survey in corporate law world is known as book building process. Book building process. Now, what exactly we do in this book building process? First of all, company doesn't issue the final prospectus. prospectus. Okay, company, let me just put it this way. So company doesn't issue final prospectus. According to the SEBI guidelines, read with the company law, it says that once the prospectus is issued, you have to mention in the prospectus that your subscription is open for how much time. Minimum for 3 days you can keep your subscription open for the public, and maximum it is 30 days. So the entire game is moving towards like between 3 and 30 days. What you have mentioned in your prospectus. If you have mentioned 3 days, you have to achieve 90% within 3 days. If you have mentioned 5 days, you have to achieve within 5 days. But once the days got over, you cannot go beyond that. And somehow, if it is less than 90%, then you must have to refund the amount. And technically, no company likes that. No company likes that. So, company doesn't issue final prospectus, but it issues draft prospectus. Understand? It issues what? Draft prospectus. Draft means what? Draft means something which is not final. Draft means something which doesn't contain the complete all the information about the company. Some information are yet to be done. For example, price of the company. Price of the company is not fixed up yet, and the issue to the public. Now, public will take the draft prospectus, will start reading all the contents like the past, present, and the future, and will decide that whether they want to invest or not. Here, company is requesting the public that you tell us at what price you want to buy our shares. So here, public will inform the company about their expectations of the price. So let me tell you, Bacha, that company while issuing the draft prospectus doesn't put the complete information about the price. It just puts the price range. Okay. So draft prospectus doesn't contain fixed price of the shares or the security. Doesn't contain the final price of the security, but it just contains the price range. Price range means what company may put like, okay, at least a company wants to go for 250, maximum according to them, they may get a 350. And companies asking to the public that you tell us minimum price I want to keep it is 250, maximum I want to keep is 350, and I'm confused what I should keep it, where I can get exactly 100%. You tell us at what price you want to keep it. Now I know some of the students are thinking, but how would public respond? How would public respond? Even if some shareholders want to invest in the company, but how will they communicate? So what SEBI has prescribed that anyone who is interested must have to take the form of the company. Let me tell you. Okay, so applicant shall fill the form. After filling the form, that form will be submitted to the company. Okay, submit the form to the company along with check. Along with check or along with the payment what you want to pay. For example, the price range is somewhere around 250 to 350 here, and according to my calculation, company's valuation goes somewhere around 270. And at the rate of 270, I want to buy 50,000 rupees. Okay, suppose my price is 270. So how much price I will pay to the company in the form of check? So answer is quite easy. 270 multiplied by 50,000 shares if I want to buy. Okay, let's take like this. 50,000 multiplied by 270. So I will pay to the company somewhere around 1.35 CR. Oh, I'm sorry, not oh. I think I made a mistake. No, wait, just a second. If I put it like 270 and also how much? Yeah, somewhere around 1 crore 35 lakhs rupees I will pay to the company in the form of check. 50,000 shares at the rate of 270 rupees. Now there are two possibilities. Look, if company determines the price at 280, that means my application will get automatically rejected. I wanted to buy at the rate of 270, company kept it as 280, so my application will be automatically gets rejected there. But what if it was kept exactly 270? Then there are high chances that my application may get accepted. In Indian Contract Act, we understood that IPO is a invitation to offer. So our application doesn't form the acceptance. So company may accept my application. But yeah, fine. There are high chances. What if a company decides, let's say 260? Then what happens? Then again, guys, there are chances that my application may get accepted. May get accepted. So let's say, guys, my application got accepted, and the price what is fixed up by the company is 260. So 260 multiplied by 50,000 shares. Total payment out of this 1.35 crores, 1.30 crores will be kept by or taken by the company, and remaining amount, that is the 5 lakhs here, will be refunded back to the shareholder. So I hope you are understanding. Look, this entire process we are performing here just to know that what should be the price of my shares. Sometimes if it's overpriced and the people are not supporting me, I may have to refund the entire amount just because I could not achieve 90% of the subscription. This is called the book building process. Again, I want to tell you, Vacha, company will not issue the final prospectus because final prospectus means beginning of counter or counting the number of days. Company will issue just the draft prospectus, and draft prospectus generally will not contain the final price, final quote. Instead of that, it contains what the price range. Here, people would be requested to quote the company. Before issuing the final prospectus, applicants will fill the form and will apply to the company along with the money. And if later on the price determined is at par or less than what you have applied in your application form, then you have high chances to get selected there. This is how, guys, entire book building process is working. I know your question. You are asking that everything is fine, but what do you mean by red herring prospectus? Look at here. The draft prospectus what we issued. ड्राफ्ट प्रोस्पेक्टस जो हमने इश्यू किया है वहां पे, नॉट फाइनल प्रोस्पेक्टस, इनकम्प्लीट प्रोस्पेक्टस, रफ प्रोस्पेक्टस. This draft prospectus is considered as, is known as here, red herring prospectus. Red herring prospectus. Sometimes in exam, instead of red herring prospectus, they may ask you that write down the short note about draft prospectus. So don't get confused. Answer is same. Draft prospectus and red herring prospectus, these two concepts are exactly same. I hope you are clear. Now, look, draft is not final. We know this very well. So few technical lawful points we have to consider. Point number one, the draft is not final. Wherever certain changes took place, yeah, obviously if it is not final, then there are high chances that from the draft to the final, some changes might have taken place. So all those changes will be communicated again to the public by issuing what? Just now I have explained in the shelf prospectus concept that Any changes if you are communicating to the people, you use a document format, and that format here is known as what? Information memorandum. That's known as information memorandum. Every changes. Okay. Second technical lawful things we have to understand is that when we read section 2 subsection 70, the entire definition, it has clearly provided that the term prospectus includes shelf prospectus as well as red herring prospectus. It means what? All those provisions what applies to the final prospectus, real prospectus, all those provisions as it is applied to shelf prospectus and red herring prospectus. You cannot change it. So, for example, the chapter contains that how the final prospectus should be prepared, what content should be added. There is a section called section 26, which provides that while preparing the final prospectus, what kinds of contents you should put there. The same section 26 will, as it is, applies to shelf prospectus as well as red herring prospectus. ठीक है बच्चा? So red herring prospectus is nothing but what? It is draft prospectus, and all the changes between the final and red herring prospectus we will communicate through information memorandum. After red herring prospectus, we are moving towards new concept, and that one is abridged prospectus. Section 33. ICI has nominated that abridged prospectus now is no longer applicable for CA inter attempt, but we should not take a chance. Okay, if we have some idea about what the concept is, then in case on exceptional case, what may happen sometimes, if there is a question, then it will help us to answer it. Now, what is abridged prospectus? Generally, when we look at suppose the prospectus here, look, this is the draft red herring prospectus here, which is going to become the final prospectus once the price is determined and put here. You see, in this prospectus, we don't see any price, rupees, face value, even the range is yet to be. They are going to decide later on. They are not sure about that at what price they should issue. So this is called the red herring prospectus. Look, generally all the information they will contain, but price is not determined here. Price is not determined. Lot of other things. I want to draw your attention towards, look at the page number. There are somewhere around 434. So prospectus is always very lengthy, and one of the provisions of the Companies Act says that each and every form of the company must be accompanied by prospectus. Every form of your IPO FPO application must be accompanied with what? Prospectus. It has created a lot of confusion. Why? Just imagine if the company has printed 10 lakh forms across the country. So 10 lakh forms multiplied by 10 lakh forms, each of them should be accompanied with the prospectus. Each prospectus contains 434 pages. Can you imagine the total number of pages company has to print as a stationery? And it's not like that each and every page would be analyzed and thoroughly read by the shareholders. Many of them will just take it and will not invest even, and they will throw their entire booklet to dustbin or to some scrap. So people requested the government that please don't make us to A company entire prospectus, that's too expensive. Look at the stationery expenses, and that's not also fruitful. If people are reading this, if they're analyzing, it is just for the issue. Once the issue got over, no use of prospectus. They requested that please don't make us to send or dispatch the entire prospectus. And even government thought of this practical issue, practical problem. And at the end, government got convinced by this and said that fine, we will not make the company to issue the entire prospectus, but some details, some significant details from the prospectus must have to be communicated along with the forms so that investors can take the decision about whether they should go for the investment or not. So, guys, this is how this concept arises that entire detail will not be sent now, but some summary of the prospectus must have to be communicated. So now what happened because of this? Company no need to give the final prospectus containing around hundreds of pages to the shareholders. That saved their stationery cost, and they prepared one abridged or summarized version of the prospectus. Summarized version of the prospectus, which will contain just the summary of the final prospectus. And in the number of pages, max to max, it can go to 40 to 50 pages, not beyond that. For example, I would like to show here, look, this is the abridged prospectus of Exide Life Insurance here. Original prospectus might have contained, hundreds and hundreds of pages, but here it is the entire information got completed just within 12 pages. And it contains, almost all the details about the company's history, company's promoter, business overview and strategy, board of directors, capital structure, shareholding pattern, then restated consolidated financial statements, risk factors, and lot of other details what an investor needs to know before he invests in the company. So this document will help him to take the proper decision, and this is nothing but I would say known as the prospectus. Look, company must have to provide here that it is not the complete information. Look at when you just read the introductory part here. This document contains information pertaining to the unlisted entity Exide Life Insurance Company Limited and the scheme of amalgamation, something what happened over here. These abridged prospectus has been prepared in the terms of requirements of SEBI circular as well as company law. Now, alright, I hope students you are clear with the abridged prospectus. Look, you don't need to struggle to memorize the contents here. Look, the title itself suggests that what should be the contents. Abridged means nothing but the summary. So any prospectus which doesn't give the full particular about the company details, but it just provides a summary of the significant details, then such document is known as abridged prospectus. Okay, you know what? Some people are very much meticulous. What if they wants to know all about the company? If they want to know all about the company, entire detail, let's say one shareholder comes and says that I want to access the final prospectus, final document, which contains the lot of pages. He wants to access this, then how to do? Look, it is the right of every public applicant that he may access or he may analyze, all the details of the prospectus. Company cannot say no. And therefore, Section 33 provides in its rules that if any applicant demands that he wants to study the final prospectus contains all the details. In the abridged prospectus itself, company must have to provide the details from where he can access this. You may provide the web address. You may provide the place where you have kept the final address, and you can also say that during these to this business hours, you can go there, you can take the copy, you can extract the information. from that place. So abridged prospectus must contains the address of the final prospectus where it is kept, and during what time the person can approach there and can get the abstract of that. All right. Even if you look at here, it's clearly mentioned that kindly scan the QR code as provided on the first page of this document to download the abridged prospectus along with the scheme of amalgamation as approved. Blah blah blah. Further, it is written that other relevant documents, or alternatively you could download the same from the company website as well. So here also it is provided that the same things you can download here. When you go to the hdfclife.com there, okay, you will just not see the abridged one, but you will also see what, the final one as well. So something you must have to provide there. Okay, so that's all about the abridged prospectus. So guys, so far what we have understood, look, now I can officially say that you have completed, the definition part. Now I think you can feel each and every word what's written here, which it tries to say that any document which is formally accepted as the prospectus, red herring prospectus, it's nothing but the draft prospectus, shelf prospectus, any random document, advertisement, circular, um, and all those conditions. So now I can say that section 2, subsection 7D, the definition is clear for every student. Let's now move to the new concept of what is provided in section 25. And section 25 deals with section 25 deals with the concept of deemed prospectus. What is deemed prospectus? For that, let's understand one situation. Sometimes, suppose there's a company. All right. Assume that it is a company. Okay. And this company is not that much popular among the people. And therefore, if it goes for the public issue, there are high chances that it may get failed. What are the remedies available? Obviously, some of you may say that go for red herring prospectus. But again, guys, red herring prospectus would be useful only if you have some identity in the minds of people. If you are just new to the market and don't have a very good fundamentals, then what to do? I know that some of you may be thinking, okay, fine, then pay the commission and go for the underwritings. But underwriters are not stupid. They know that if they are getting commission, but in opposite to that, if they have to pay a lot of money to fill the gap, then that's not a good deal. If they're earning 15 crores, but in the name of investment, if they're going to make 75 crores, it's too risky, then what to do? All right. So in this situation, what company do? So there are so many options to get the share subscribed. Um, Red herring prospectus, you can go underwriting, you can go. But what if a company thinks like that? These ideas won't work. तो क्या करो? You want to, but what if these ideas don't work? So now company plays very safe here. Company plays very safe. How it plays safe? It will go to some reputed firm, some reputed institutions. Precisely, let me name them. Suppose the reputed institutions are State Bank of India. All right. Company will request the State Bank of India's executives that hold on just a second. is I'm looking for. It's not here. Hold on. एक second रुकना. It's not containing what I'm looking for. ठीक है, छोड़िए उसको. Okay, understand here the company is there. So what company will do? Company will go to reputed institution. Let's say here, name is State Bank of India, and will request the people that this is the balance sheet fundamentals and company's history. On that balance, you make some valuation and help us to get our shares transferred to the public. Help us to get our shares transferred to the public. Now, how such a institution can help them? So, first of all, they will, if they find some significance, some substance in company's fundamentals, so what they will do is, first of all, they will acquire all the shares. So, company will transfer all the shares. Look at now. Company will transfer all the shares. Company will transfer all the shares to such a reputed institute. And now, slowly, such institute will transfer such securities to the public. To the public. So now, institute to public. So company to State Bank of India and State Bank of India to public. Now, you may be asking that what kind of benefits State Bank of India enjoy. So there may be two kinds of contracts. The type of contract like this, fixed rate method or commission method. Now what do you mean by fixed rate method in this environment? Fixed rate means whatever shares, number of shares transferred by State Bank of India to public, you know, State Bank of India will transfer to the company only, suppose let's say 120 rupees. Fixed rate. 120 rupees. That means any fluctuation is there that will be borne by State Bank of India. Suppose in the contract it is written that these shares were acquired by State Bank of India will have 120 rupees, and if SBI is selling the same shares to public at the rate of 200 rupees, 80 rupees is the profit earned by State Bank of India will not be returned back to company. That's the first method. But what if it is 90 and there's a loss? Then this loss would be borne by State Bank of India. Whatever amount is mentioned in State Bank of India as fixed rate, that would be paid by SBI to the company. और कुछ ज़्यादा पे नहीं करना है, उतना ही पे करना है. In commission method, what happens? In commission, students, State Bank of India will not acquire the shares at the fixed rate. It will help company to get it sold to public because SBI has very good network. Whatever price comes, let's say if it is 120, 130, 140, 150, all this money would be paid back to the company. And State Bank of India will earn some percentage of commission. Let's say commission at the rate of 10% or even let's say 5% here. 5%. 120 into 5%, 130 into 5%, whatever amount they've acquired. Now in this entire model of share issue, what interesting fact we are finding that first of all, company is transferring all the shares without accepting the payment. Payment will not be made immediately. Just the shares will get transferred from company to State Bank of India. And then SBI will slowly start selling or auctioning all these shares to public. Public will now pay money. Understand? Public now will pay money to SBI. And the same money will be further forwarded to company. So one fact is very much clear that the State Bank of India is acting as the representative of the company. It is transferring the shares on behalf of the company. And therefore, this kinds of model to get the shares or security subscribed in corporate world is known as offer for sale. It's known as offer for sale. Understand? Okay, I know some of you are thinking that okay, sir, everything is perfectly fine, but where is the concept of prospectors? Okay, see now, when State Bank of India is transferring these shares to public, obviously, in order to convince the public, it will issue some document which will contain the details about the company, about the past of the company, about the present state of the company, about the future of the company. Something will be communicated to convince them. कुछ तो बोलना पड़ेगा. So, in order to convince the public, what if guys State Bank of India issues some document which will contain the details about the company? Obviously, State Bank of India will take and acquire the company's details and then it will forward to the public. And my question comes like, what if this document contains some false information? Question comes like whether company and the State Bank of India is liable for this or not. That's the question. That's the question. Or in other way, I want to say that all the provisions of the prospectus chapter applies on this document or not. This advertisement document or not. Okay, let me make it more precise. On this advertisement document or not. That's the question. Okay, I think one thing what I supposed to discuss at the beginning of the session I have not discussed with you, but this is the time. Look, prospectus is a very sensitive document. Why? By studying and analyzing the prospectus, you are going to make your investment decisions in the company. So, law believes that a prospectus should not contain any material misstatement. Let me just put it like this. Prospectus shall not contain any material misstatement. Material misstatement stands for here any wrongful information. At this point of time, you just understand that it means any wrongful information. Prospectus कुछ भी गलत कंटेंट नहीं किया होना चाहिए. Further, it provides that if it contains any misleading information, if it contains any misstatement like contains, then these three kinds of people who knows about this fact are liable. First are the promoters, who are guilty, who knows about this fact, but still they let the prospectus release to the people. Second is the directors, and the third one is the experts. Experts who issued certain declarations and certain certifications are liable here. Sometimes while preparing, the prospectus, we may have to add certain certifications like about the financial parameters, about the technology. So whosoever is expert is also liable for this. Maybe you want to know that what a kind of liability may be there. Law believes that material misstatement in the prospectus would attract the punishment as mentioned under section 447. Now, maybe you want to know that what's that this 447 is. Look, 447 in our corporate world, I call it as the AK-47. Even while teaching CA Foundation, if you remember, we discussed a little bit about section 447. AK-47. It contains the punishment for the fraud. If company or the company's officers are making any fraud with the people or to any individual person, punishment as mentioned in 447 will apply. What's that punishment? Look, maximum imprisonment under section 447 is 10 years. 10 सालों की जेल की सजा हो सकती है यहाँ पर. If fraud is made with the public at large, then minimum imprisonment is 3 years. Minimum. So if you have made cheating with the public of this country, then you are gone. Minimum 3 years you must have to calculate. You have to go for imprisonment. And if public is not involved and company has made fraud with few selected people like banks or the government authorities like income tax or the GST, then minimum 6 months imprisonment is there apart from the fine. So fine and the penalty is there. That's the difference. But imprisonment to itna hai. So just by understanding this provision, I think you're clear now that how the government is sensitive about the provisions of prospectus. It strongly believes and wants to ensure that companies should not contain anything which is material misstatement or misleading in the prospectus. Otherwise, you see, guys, this is what the penalty is. This is what the punishment is. So here, my question comes is like if State Bank of India here is issuing this advertisement document which contains some misleading information, which contains some material misstatement, which contains some false information, then indirectly I want to ask is like whether this section called 447 applies or not. Whether this section 447 applies or not. क्या वो apply होगा or not. Whether company's offices are liable or not. Whether this institution's offices are liable or not. That's what now we are learning. According to the logic, what it says, if the document is the prospectus as defined under section 2, subsection 70, logic clearly says what? Chapter of prospectus, as I explained earlier, that section 22 till section 41 applies on the document. That's the note number 1. If the document is the prospectus as defined under section 2, subsection 70, then chapter of prospectus apply on that document. And if the chapter applies, section 447 also applies, because it's clearly mentioned that whenever you contain any material misstatement in the prospectus, then section 36 clearly says that punishment under section 447 will be applicable. And so our entire debate comes like whether this advertisement document, what we are talking in this offer for sale transaction, whether is it a prospectus or not. Because if it's prospectus, अगर ये prospectus है, then entire chapter of prospectus will be applicable. And if it is not a prospectus, then chapter doesn't apply. If it is considered as prospectus and chapter applied, then the responsible officers, whether it may belong to State Bank of India or even the company, are liable under section 447 under the charge of providing misleading information to the public. So if you see, students, when we talk about section 2 subsection 70, when we read the entire definition, just let me go back to this. Yeah, this is what we did in the last session. Section 2 subsection 70, which clearly mentions that document issued by company or body corporate. Look, any document, any red herring prospectus or self prospectus, advertisement, circular issued for the securities of a body corporate is prospectus. Nowhere it mentions that if it is issued by other than company or other than body corporate, then it is prospectus or not. So if you apply section 2 subsection 70, we do not get any perfect answer for that query. Got it? We do not get any perfect answer. कोई perfect answer नहीं मिल रहा. But if you read section 25, okay, तो वो क्या कहता है? If you read section 25 and section 2 subsection 70 together, the answer goes like this, that such advertisement document which contains such misleading information is not a prospectus under section 2 subsection 70. वो prospectus नहीं है, because it's not matching the criteria as mentioned under section 2 subsection 70, but it will be considered as, or it will be deemed as prospectus. Let me tell you, it's not a prospectus, it will be deemed as prospectus. It's not a prospectus, it will be considered as a prospectus. वो prospectus नहीं है, लेकिन उसको prospectus की तरह treat किया जाएगा. It will be treated as the prospectus. And therefore, students, even if it's not issued by the company itself, but it's done by some mediatory. Actually, technically, this mediatory in our corporate law is known as, I think some of you know this very well, issuing houses. Issuing houses. It's known as what? Issuing houses. Got it? Issuing houses. So, students, this is known as deemed prospectus. And the entire chapter, all the provisions would be as it is applied to, as it applies to the deemed prospectus as well. And therefore, if deemed prospectus or this advertisement document contains any false information or misleading information, then obviously section 447 will apply. Not only to that, guys, this document must be prepared according to section 26. Whatever contents are provided by the company law, okay, that format, what should be the format, what should be the contents, what should be the details, what certifications is needed, what declarations is needed, everything should be prepared just by following this chapter. And if you're not doing this, then you know what will happen. Okay, so that is the beautiful concept of deemed prospectus, and this entire process is known as what? I would say offer for sale. Don't forget that.